Good afternoon, good morning. Hey, let's get okay, where's my microphone? Hold on. All right, let's make sure we have no audio and visual issues. You guys can see the screen and am I audible? Cool. All right. So what do you have here for today? How's been the week? All good so far? Let me see if I can just give me a moment. What do I Morning. Tesla. Oh, Tesla has been on tear. You can't go against Tesla. That thing is for sure. Yeah. Yeah, so we'll look in what's happening on Tesla as well. What else? So Tesla is one. Doge. I'm not sure if you're referring to the Doge coin or are you referring to the Department of Governmental Efficiency, but both of them are kind of tracking, correlated to each other, Kent. Yeah, so we will talk about crypto on a little bit on crypto as well. This week there was a big milestone on crypto. So we will talk about it. Ramesh ji is saying Tesla is my alternative to crypto. Yeah, that's fine. I mean, everyone has a itch to scratch, and if you can scratch your itch by trading in and staying in Tesla, that's fine. Nothing wrong with that. We don't have to get into every stock or every hot stock. Figure out what works, and if crypto is not for you, that's okay. You got Tesla, right? That's fine. I think the problem in investing is most of the folks that try to imitate others rather than trying to understand themselves. It is most important thing is know thyself. But everyone try to find out, okay, what is Warren Buffett doing? What is Howard Marks saying, or what is Tom Lee saying? Uh, so as long as you figured out what works for you, yeah, stick to it. Jonathan says, I'm new to investing in stocks. So, welcome. I think everyone starts their journey at some point of a time. Which stock is the best to invest into? None of them. So I know, you'll be surprised by this answer. If I don't know where you are going and what time you want to reach at your destination, I can't tell you which vehicle you should use. I don't know if you have to go to one block or you maybe you need to go to 2 blocks out, right? In that case, I'll just tell you, just walk. If you have to go out 50 blocks and you have a time for an hour, I'll say maybe, take a bike. But if you have to go 500 miles, I'll take you drive a car. And I know very well that you might get a flat tire and you might be stuck in the traffic and you might be cursing me saying, gosh, why did you ask me to get in the car when I see that the folks who are just walking and just passed me? Or I could have just taken my bike, could have pedaled much better, but I know you have to go 500 miles. So you're asking me which stock to pick up. I don't know where you have to go. I don't know how long time frame do you have? Right. And if anyone is giving you answer for which stock to pick, they are not being honest with you. So there is, without knowing, Jonathan, what your out timeline is and what's your outlook and how far you're looking to invest for, I can't tell you anything. And third thing is, I don't know you as a person, right? Maybe I'll tell you go in a ship, take a to go to, let's say, pick a destination, right? Let's say you want to go to Chile. I'll say take a cruise line And I don't know that you are seasick. If you are seasick, maybe I'll tell you, take a flight. So I don't have an answer for, and I want to be honest with you, rather than throwing some stocks, saying, hey, these are the great stocks to invest in. I'd rather be truthful and be honest and saying, I don't know which stock is best for you. I can talk about which is the best stock for me, but I don't know if that is best for you. But there will be, and if you go to any other meetup and then people tell you which stocks to invest in, they're not being they're not being honest. So stay here. We'll talk about stocks. We'll talk about ETFs. We'll talk about individual companies, and then you see some of those make sense based on what your risk profile is, how conservative you are, based on how long do you have before you need the money from that investment. Then you decide which is the best one for you. Again, I think I started my conversation with people try to imitate what others are doing without knowing themselves first. So you need to figure out what works for you. I don't think I can do that in a big group. These are the discussion. I mean, if you can't figure out what kind of an investor you are, then you need to have a one-on-one conversation. Okay. So yeah, we'll talk about stocks, uh, which may be best for me, which may be best for some other people, may not be best for you. Right? Like Ramesh said, crypto is not good for me. He's happy with the Tesla. Great. Crypto works for some other people. Okay. All right. Docu. Yeah, Docu had earnings, and I think the stock ripped after earnings. So I do own Docu from not the best investment that I'm very proud of, but it is what it is. You can't win on all the stocks, but I got into Docu during the 2020 when all these stay at home stocks were ripping, and after earnings Docu was up what almost 30%, right? So they have a change in leadership. Now they are, I think, more focused on their core platform of signing. I've not gone through the earnings because it's not a biggest part of my portfolio, so I've not gone through in terms of what has happened in the earnings, but I think they are getting back to their roots. Maybe once it becomes little more and starts to show up on my radar when I'm looking at, okay, which earnings do I need to review? Probably I'll start reviewing it. Right now it's still a small one. MSTR, micro strategy. I mean, isn't Prasadna is asking micro strategy? I think all the financial media, all the channels are already full to the brim talking about micro strategy, and also inviting a Michael Saylor to come and give his spiel on what the heck he has done. Has he discovered infinite money glitch? I mean, we talked about in the last week's session. How long can this continue? We'll see. But I will touch upon a lot of execs are selling MSTR shares while retail investors are lapping up and buying MSTR shares. It's not a. You must understand, if you're investing in MSTR, what's your thesis is. If you're investing in MSTR because you're interested in Bitcoin, why do you want to pay 2x or 3x the price? The only reason why you would still stay invested in MSTR as a stock is that there will be bigger fools who will be coming in and continue to pay heavily for over expensive MSTR shares. And I don't blame Michael Saylor. Every podcast or listen to, he's been very clear in saying we're gonna dilute shareholders and continue to sell the shares. And Shareholders still go and buy it. I mean, how crazy can this go? It's like a forgot. So if you who are buying yeah, a lot of retailers are buying on MSTR. It's the institutionals. There are few institutions who may buy, right? But majority of the institutions, they are into MST. They are buying the convertible bonds of MicroStrategy, not the shares. And all that new financial metric, BTC yield, that Michael Saylor talks about, which tells you, hey, it doesn't matter. You paid 3x the price of for MSTR, but you still got a higher Bitcoin per share. Right? What even talking about? If a company gets liquidated, shareholders have no claim on the Bitcoins. It's the bondholders who will get the Bitcoins. So, I mean, he has figured out. I mean, as long as the retail investors continue to support in lab and buying the shares, I'm 100% with Michael Saylor. Continue to dilute the continue to dilute the shareholders, sell, issue the shares, raise the cash, buy Bitcoin. That's what he wants to do. He could have used that money to do anything else. He just wants to buy Bitcoin. But I mean, if the stock price is so overvalued, as a CEO, I mean, it is his fiduciary duty to to sell the shares, and he's doing the right thing. Bigger question is, you as a shareholder, do you want to be in it or not? If you're buying, I mean, we can't buy convertible bonds, but if you're buying convertible bonds, I understand the thesis behind buying the convertible bonds, but I can't understand why we would buy the shares. Only thesis could be, oh, this craziness can become bigger. And I don't think that's an investing thesis. Ross says Palantir inclusion, financial engineering into NASDAQ forced ETFs to. I mean, that's not a financial engineering. Yeah, Palantir moved their primary exchange. They're moving their primary exchange from NYSE to NASDAQ. I think it already moved. Wasn't it last week or somewhere, Ross? But there was a news that they want to move. Of course, the stupid board of director came on Twitter or X and said, "Hey, we want to move so that all it become a part of QQQ, and then the ETFs will buy it, and we want to deliver 10Ds to our retail investors." What a stupid comment! And I think the lawyers probably would have called him saying, "Behave like a board member." Not only deleted his tweet, he also deleted his profile. But yeah, so Palantir, from my perspective, too expensive. And I will talk about Palantir. Next year, back to office may not be good for Docu, but they're expanding into other fields, so may have. I think so. Even I'm not sure if back to office will have a huge impact on Docu, because I mean, it doesn't really matter even if I'm meeting, let's say, some folks in person. Let's say if I want to close on a mortgage refinance, I still don't want to sign hundreds of papers in in wet ink. I mean, there are some states that require a few documents to be signed in wet ink. I think I would still continue to. I would prefer to have an e-signature. What was doing is to move from being a e-signature company in which they have a lot of other competition to become a total agreement cloud. And I think I don't know recently or not, because I've not tracked Docu for some time, but they made an acquisition uh, which of a company, and I think using generative AI, they are able to derive value from that acquisition in terms of it can read through your contracts and you can ask some questions, right, in your normal language to make sure that that you have what you need in the contract. So I think that specific area is working well for DocuSign. And again, I have not gone through the earnings, but I think that's where DocuSign stock has done well. some of the recent acquisition that they've done for contract or agreement management. I think that's working out for them. Being just an e-signature company, I don't think that would be a thesis to invest in DocuSign. There's a lot of a competition already in it. Even for an overall, a contract management, we still have, Adobe as a big competitor, but the TAM become much bigger and they have a much bigger, space or area to play in. So, but yeah, I think it's probably coming back to life, DocuSign. Let's see the, you know, let me just pull up docu docu. Wow, it's yeah, not bad, right? 88% year to date, not bad, not bad at all. Let's go back last three, but if we expand it and go back to, let's say, last 3 years, I think it's still down. I mean, it was 163, and I think if I go further back, it probably was even higher, like 314 was its all-time high. So still, I mean, it's still down, what, 66%, two-thirds of where it was during its peak. But yeah, I think now it is where it was last seen in 2022, Jan 2022. So almost, what, 3 years of recovery, close to 3 years of recovery. But still a lot to catch up. ACHRGOBY. I think Archer Aviation and Joby Aviation. None of the. I'm not too interested in these companies. These are, I think there is a chart that I have. It's called Dow of Degens. None of these companies have made operating money yet, so they will always be dependent on the generosity of either the equity market or the debt market. And we have seen in 2022, when you are dependent on someone else for your livelihood and you don't get, uh, you know, let's say, I think last week we talked about another company, Lunar, LUNR, I think Intuitive Machines. I had a similar comment. I said this company is dependent on external factors to breathe. They don't know how to breathe. They are on a ventilator. As long as the ventilator works, it's fine. It will survive. The moment the oxygen is turned off in the ventilator, they don't know how to they'll just die. We have seen many such companies die in 2022. I'm not talking about ACH or GOBY will end up into that phase, but because I've not looked into this, but I don't think that they make any money yet, even from an operating perspective. Oh, come on, they don't have much history to look at it anyway. Uh, no money. It's right now. It's just Joby is just a story. It's just a narrative. Any investing thesis should have two elements. One is what's the story of future. Number two is, hey, do you have even numbers to back it up? Right. Right now, it's just a story. And you can believe, if you believe in the story, yeah, take it. I have no concerns. I don't I don't invest just based on stories. It's like telling someone, hey, you see this 5-year-old kid, and I gave this example last week. This is gonna go to Harvard. He is a prodigy. He or she is a prodigy. They gotta be the best scientist that the world has ever seen. Fine, these are all our story. Right. I need to see that the kid get the great numbers, is A plus grades, and maybe is a merit scholarship holder. That's the proof. Right now, it's the story. Joby Aviation is a story. If you believe in this, it's up to you. Let's look at ACHR. Wow. So again, no, they don't make anything. So no wonder they have to either raise money from debt market, or they have to dilute the shareholders. So what they have been doing is diluting the shareholders 33%, 43%, and trying to, this is what's called a ventilator, trying to try to continue to survive in a hope that, if they can survive and live longer, it might become a good company. Again, this is also the same part. It's a right now it's based on a story, and if it works out, maybe it'll work out, maybe it will not. Now, based on that, now you can decide what you want to do with it. Yeah. So last week there was I think who brought it up? I think it was T brought up similarly intuitive machines. And again, my thesis was that they will need external capital to survive, because they don't make any money anyway, right? All the margins are negative, and they've been diluting the shareholders. And it was, it was day before yesterday, or maybe a couple of days before it, there was a news that they are doing another offering, secondary offering of $110 million. Again, more dilution. So if you want to invest in, yeah, I mean, it's up to you. Maybe put a very small percent of your portfolio, right? I don't want to bet my house on a kid in kindergarten, even though the teacher might say it's got the best potential, it's the best student that they've ever seen. Yeah, maybe I'll put my 1% of portfolio, right? I'm not going to put 20% of my portfolio. I want that kid to go to college, and once he gets into, let's say, MIT, etc., maybe then I'll put 10%. You know, so these Archer, Joby, if you buy into their story, yeah, you can take maybe very small portion. How do you tell dilute shareholders? You can look back at their buyback yield, and or you can look at how many number of shares have been outstanding. Have they been increasing or not? If your number of shares outstanding is increasing, it means company is offering more and diluting the shareholders. Reid Hoffman is a board of director on Joby. Maybe interesting long term. You know how these BOD stuff will also work, right? And Reid Hoffman probably have investment in 30 other companies. They will also spray and pray. And you putting all your risk money into this company, whereas Reid Hoffman probably is putting it to 50 other companies. So his risk may be very limited. So don't take equivalent amount of risk. Don't take a huge risk thinking, okay, Reid Hoffman is with me. Same is the case with the VCs. Don't go and buy the shares because, oh my God, Sequoia is in it, right? Sequoia was also in FTX. They didn't do any due diligence. And now that, yeah, those two partners are out, but we also know, the game has changed, man. The game has changed. I've seen many VCs not doing the role of the VCs what they used to do it, because right now it's all AUM game. You can make a lot of money by deploying the capital, not by really, you don't really have to make sure that the capital is invested in the companies that have a great future. As long as you've invested, you anyway as a VC, you made your money. And things have changed over the past few years because of the amount of money that is coming in the VC area, and that has distorted all the uh, I would say the incentives. One of the VCs wrote a very good memo on this one. Was it from Altimeter Capital or which one? How the game of the VCs have changed. And he was being very honest. Says now each of the VC, a VC partner may be sitting on a board of 20 companies. There's no way they can actually guide the company to do the right thing, right? If if you as a VC, you have, let's say, 200 million, you're only gonna make What 2% of 200 million is what, $4 million in your management fee. So that is not g- good enough. That's not a life-changing money, $4 million. So your focus will be to focus on the other part of your fee, which is your 20% of the profits, right? Generally, it's 2/20 or on 20% of carry. So you will do all you can to make sure that the companies that you invest in become successful, so that if you invested $5 million in a company and it becomes 100 and $200 million, you get 20% of that profit. To make that life-changing money, VCs have to make sure that they're investing in the greatest company. They will help each of the companies to become successful. Now, with all these sovereign wealth funds and big money coming into the VC area, it's pretty common for a VC fund to have $10 billion under its as a capital available to them, right? Or in some cases, even $20 billion, $30 billion, right? So if you have a $10 billion available, what's 2% of $10 billion? Is uh, what's 20 million? The 2% of $10 billion will be whatever. That's a life-changing money anyway. So all your focus as a VC will be, let me just deploy the capital. I'm going to make life-changing money just by deploying the capital. Even if the company doesn't perform that much, I'm still going to make my 2%. I don't have to hunt after the 20% carry. So the game has changed just because of so much money coming in. Like a lot of money, what it says, everything is good in moderation, right? Even when it comes to the capital, as long as it was in moderation, incentives were aligned. Founders and the VCs incentives were aligned. Now the incentives are distorted. VCs incentives are, I need to deploy the capital, and founder incentives is, I need to make the company successful, and VCs don't have a time to help because, hey, I need to figure out where to deploy next capital, so that the moment I deploy capital, my 2% meter will start running in, and I'm gonna make 2% on all of the capital deployed. So nowadays, I don't just think of that if a VC is in this company, it's a great company. I have to do my own due diligence. Asif says made lunch money on Joby, not following any. Yeah, 2021, I think a lot of folks made a lot of money on some of these stocks that were zombie companies and were a product of ZERP environment. And a lot of folks then lost a lot of money in 2022, right? When when the zero interest, when the free money disappeared. So it's been a roller coaster ride for those companies. I think many of the companies didn't even survive. Some have probably figured out, they tightened the belt and have come out better, right? So, but I think as an investor, I've learned my lessons. So I'm okay. I don't have to run after every new hot stock. I need to use my own head and not depend on this influencer is saying it, this VC is saying it, this other investor is saying it. I think like Jonathan asked, which is the best stock? I don't know. I mean, for that investor, that may be the best stock because they have a different goal. May not be for me. All right. Okay, Hoffman's SPAC. So Hoffman has its own SPAC, right? Like Chamath Palihapitiya, he was like a SPAC king. What happened to many of those companies? Now they're trading for a few cents. Some part of a time, many of those companies were trading for $50, right? $20. Now those are like all less than a dollar. Lost 98% of their value. Again, it's a social capital was a still, value, it's a big VC company. Right? But he made his money. Chamath made his money by just taking the companies through SPAC because you get what, 20% or 25%, and he made his money. The people who lost money are the like investor who just went blindly after Chamath and maybe bought all the companies in which he brought up through SPAC. As Kamath. Good one, Asif, good one. What's your take on meme coins or altcoins? Altcoins, I do have some thesis. Meme coins is like lottery tickets. Right? The name itself is tell you meme coins. Hey, I'm just here for fun. We'll just pump it up, and if it works fine. We will dump on you. So if you want to be in that, you figure out how quickly you get out. Altcoins, there are some theses, depending on which altcoin project you're looking at. You need to understand what that project does, what's the adoption of that, are there real life use cases, is there development happening on it, is there any activity on their GitHub, do you see those projects giving you enough reports in terms of on the updates on what they've done, what their adoption is, if it's in the DeFi, what's the total TVL on it, right? So it need the same amount of a due diligence as a stock investing would. So there is no free lunch, there is no free money. So yeah, so I don't invest in meme coin. I mean, I think it's a oxymoron saying investing in meme coin in the same sentence. So I don't speculate or gamble on meme coins. I don't have that gambling. Uh, I don't get fun from gambling. But altcoin, yeah, I have some in some altcoin, but then I have my thesis behind it. Alrighty. Okay, so let's start with today's session. I think I've answered all the questions that came up till now. Cool. So, okay, so welcome everyone. This is our 258th session, talking for, gosh, almost 4.5 years every Saturday. Thank you for joining in. For today, I do want to cover, of course, there's a big milestone on the crypto side, on the Bitcoin. The other thing which happened this week was AWS reInvent. I've not gone through all the details, but I did spend some time yesterday on just looking at what they have to talk about their offerings on the AI side. You know, right now all the valuation of all the companies are on all the tech companies is based on what they're doing on the Gen AI. So that was the first thing I wanted to hit is almost, I think, hour and a half long um, keynote session by VP of AI and Gen AI of Amazon, I think Swami Subramanian, and of course, then his colleagues, and then some of the customers' testimonials and all that. So I'll give you a quick update on what Amazon is doing on the Gen AI. Probably next week, I'll look at the other aspects of AWS reInvent, and then we'll provide you update. Then there are some individual stocks. Look at overall market. The standard stuff that I cover in every session. So before we dive in, please note anything that we discuss here is only for education. Don't go and trade based on any stock or ETF or anything that you hear in this meeting. You have to determine what works for you, and just don't trade based on either me or anyone else that you hear on any social media, right? So at a high level, markets hit a new all-time high again this week, right? I think as for S&P 500, it is like 53rd or 54th all-time high, right? If you just, we have what, 52 weeks in a year, and we already have what, more than 50th all-time high. So pretty good ride so far in the market. And looks like in the holiday season, we still have many reasons to be optimistic about the stock. Have a record high. Bond market still has a favorable yield, right? If you can still go and buy if you are just an income investor and you don't want to take any volatility of the stock market, you can still get 4% for 10 years. You can lock in 4% for 10 years. So stock market is an all-time high. Bond yields are still favorable, right? And then the economy continues to grow. I mean, what else you can ask for? Economy is growing. in the stock market is growing as well. So we had some ISM and the PMI numbers. Looks like both are expanding. The labor market also was good. So we had a job above expectation. Number of jobs were added, and unemployment rate is still 4.2%. Right? So now I think all the eyes are on Fed's FOMC meeting, and you know what the FOMC gonna do to the interest rates. It could be, I think market is pricing in 25 basis points cut. I don't know why do we need that. It doesn't look like that the economy is in trouble or that the labor market is having issues. So me personally, I don't think Fed should cut the interest rates, but what do I know? Right? Market is pricing in 25 basis points. We'll see what happens after the FOMC meeting. Well, overall, I think the fundamental backdrop is still intact. Right. And and that is why there is a lot of a capital which is flowing into the US markets. And that's the reason why the market is as strong as what we think. 70%. So US market currently is 69% of the world's overall stock market. 69% of the overall stock market valuation is US market. And whereas our GDP is what? Less than 30%. Not that there has to be a 1:1 correlation. And population is what? Like less than 10%, right? Or less than 5%. But a lot of money is flowing in the US market because, the type of companies that we have. And if you think, oh gosh, we are already what, 26 SPY. We're already 28, 29% up year to date. And I think maybe I should, take some risk off. Take some gains and take the risk off the table. I'll get back in when the market corrects. Last 2 years, January. So I looked at the January month for 2024. Market was up 2%. I think on 31st something happened. Then the market fell down. Otherwise, it would have been up close to 3%. 2023 market was up like 6% in January. So a lot of money maybe it is a seasonal effect that if you have a good yearly closure, the money that has been sitting on the sidelines, sometimes they're like, okay, what? I'm getting in the market now. I've had enough. Market is not corrected. So I don't know what's gonna happen in January 2025. I don't have that crystal ball, but we'll see. We'll see. Seasonally, January could be if the December is strong, then the January stays strong. But we'll see what happens. I just wanted to throw these numbers before you decide to, maybe take some risk off the table. If you want to, go ahead. If you're losing sleep, saying, gosh, we are already up 28% for this year. We were up 24% last year, 24, 26, whatever it was. And you want to take some risk off the table, go ahead. There is no investment worth losing sleep. So if you're losing sleep on, thinking that stock market might correct, yeah, feel free. So year-to-date performance, like I said, S&P is up close to 28%. Communication is up 40%. The worst performing sector was healthcare. It was actually doing better, but then after the announcement of RFK Jr., we gave up some gains on the healthcare, but still 5.5% is nothing to sneeze at. There are no other fixed income instruments. I mean, unless you go through the corporate bonds, which will give you so much. So pretty good ride so far. Any thought on UH? Ross is asking, any thought on UHC news? Yeah, we will. I will talk about it in conjunction with other stuff also. Similar stuff, what's happening in the world. Why healthcare is more down? One is, I mean, maybe next year probably healthcare might improve. A lot of there are few companies only in the healthcare that have performed. The ones that are related to GLP-1. Um, lot of evaluation in the healthcare sector comes from the biotech and all that stuff, which are dependent on either M&A or IPOs. And both the M&A and IPO doors have been closed for last 2 years. So healthcare hasn't really performed because of those reasons. Now, next year, with number one, with a little bit of a loosening up of our regulations, we might see more M&A activity happening. We might have a little less aggressive FTC chairperson that will give a exit route to the biotech companies, and also will enable a bigger pharma companies to acquire other companies, right? And so maybe that's what market is thinking in 2025. In this next administration, we should see healthcare performing better than what it has done in last 2 years. What else? I saw another interesting article. Again, this is based on, hey, the market is already so high. Richesh Sharma, this is an article in FT talking about current US market is the mother of all bubbles. I don't know, we can call it a bubble because you never know if it is a bubble under it bursts. So is the market richly valued? Yes. Is it bubble? We don't know. Right? It's not available cheap. Right? It's not the US market is not available at a cheap price. It is expensive, and maybe it is expensive because where else you will go? All the money is coming into US market because there is, Europe, nothing much is happening. Right? China have had troubles. China's stock market is back to where it was 15 years ago. Where else are you gonna go? The dollar becoming stronger is doesn't bode well for the emerging markets. So there may be a reason. That's the reason why the US market is more expensive. But that doesn't make it a bubble. Right? So anyway, so I think he was talking the same thing. Relative prices are highest since the data collection became a century ago. I think we talked about this stuff. US account for now 70% of the global stock market, up from 30% in 1980s. And the reasons are the companies, and I feel the companies that are in the US stock market have a very different profile than the companies that were in 1980s. GE versus, let's you talk about companies like Nvidia or Apple. Look at the margin profile of these companies. Vastly different. Why would I not pay more for the company that generate 60% profit margin? In 1980s, you go back to conglomerates, a big um, infrastructure companies, oil companies, their margin profile is very different. Right? So trying to compare the 1980s and 2020s, I don't think that's a fair comparison. The constituents have changed, the players have changed. These players are much stronger, and hence I'm willing to pay more to have those players in my team. Okay. Then again, I think he talks about the overwhelming consensus is the gap between US and the rest of the world is because of earnings power of the top US companies. I think this is what I just talked about. But one definition of bubble is a good idea that has gone too far. I don't know if it has gone too far yet. Right? There may be individual companies where we have gone too far. Maybe overall stock market may not be. Right? What else? I think the same story. Folks in India, they're buying US companies. In Singapore, they're buying Nvidia. And compared to many other developing nations, however, our GDP is growing slower. I don't think that the GDP growth, which is economic growth and the stock market growth, has to be correlated. China has taught me this lesson. China's GDP over the past 15 years have grown multifold, but the stock market hasn't gone anywhere. So trying to correlate saying, hey, if your GDP has not grown, but the stock market has grown, that's anomaly. I don't think that's fair. If because from that perspective, China stock market should be currently the most undervalued market in the world. Right? We don't think so. China is still uninvestable for a lot of companies. So there are other factors than just the GDP or economic growth that makes some of the markets very attractive for investors. And maybe US probably has that. What's happening in the rest of the world? Where are you going to go and invest? In Europe? We're seeing the France government, the government in France got, the no confidence motion and the prime minister is out. Now the president Macron has to find a new PM. And the government is not stable. And anyway, nothing much innovative comes out of Europe. Go to Asia. China has not worked out. Now Korea had a um, martial law that lasted for only few hours, I guess. So President Nippon had imposed martial law, and then the lawmakers, even from the president's own party, defied and overturned that martial law, and now they're impeaching the president. What the heck is happening in the world? So I mean, Korea is considered a well-developed economy with the rule of law, but such things do happen. And if you have a time, go back and look into the history of Korean presidents. You don't want to be, even if someone asks you, you don't want to be president of South Korea. None of them, had a good ending. Either they are all impeached or they are sitting in jail. Right? So this one being impeached is nothing new. And then third one, UNH healthcare CEO was just murdered in the broad daylight. It was a shocking incident. And I mean, there is a video of the shooter. It's a professional hit job. Now there are, and I don't, I mean, someone, I think the thesis that the media is talking about it, that someone was disgruntled and probably hired a contract killer to kill the CEO, because I think on the bullets also they were etched these are three words, right? Denied, I forgot other two, and all those. And I think there's a book related to those three words, which is around the insurance companies and how they deny the claims and all that stuff. And if you look at the stats, UNH has the most percent of claims denied. Thank you, Kristen. Denied, delay, depose. So UNH has the most highest percent among all the other insurers of the claims, insurance claims that they have denied. And for sure, folks would have lost their loved ones because they couldn't provide the medical treatment that someone needed because insurance didn't pay for it, or if you provide it, probably went bankrupt because insurance didn't pay for the claim and all that stuff. And someone was took revenge, and it was a hit job. Where is, I mean, I'm not sympathetic to the killer. I mean, it's a no reason. CEO is doing the job what he is tasked with. I mean, it's a capitalist society. Our system works this way. So I don't condone that. Hey, if you are not happy, or if you have been harmed, go and kill other people. I mean, it'll become a anarchy and lawlessness, right? So, and there are no the photos floating around the internet. Internet sleuths are not helping to solve the case or find the suspect. Maybe there are many sympathizers probably who are going through the similar issues, and that's why we'll say I hope he get caught and is get the highest level of punishment, so that does serve as a deterrent to anyone else thinking about doing similar actions. This is not USA. This is not USA. It's a big stigma on us as a country. We have to solve the health problem, the whole healthcare system. We got to solve it. I'm not saying that everything is hunky dory out here. Our system is screwed up, but we can't solve it like this. That's not a way to solve it. Tsunami warning. Right? Oh, so while this is happening, all I'm like our cell phone, where got an emergency alert. Then I saw a message from my daughter saying the cell phones of all all the cell phones of the kids in the class, they all went to alarm mode. I'm like, what the heck? Why is a tsunami warning? So I immediately searched for an earthquake. Looks like close to 7 Richter scale. We had an earthquake, but then the tsunami warning was cancelled, maybe within an hour of couple of hours. So everything is safe, nothing bad happened, but you know, I'm not, yeah, getting a tsunami warning for a moment was, what the heck? Did we had a huge earthquake? I didn't feel anything. Sitting at home, I think my daughter's, she told that she felt in her office, maybe, but I didn't feel anything. I only got to know that there was an earthquake because we had a emergency alert that went off on our cell phones. Ross says so many heard by insurance company, but the only narrative media is how well the CEO performed for the shareholders. True. I mean, media will sell what works best. So there may be another type of a media, and if you're talking about a financial media, I don't know if anyone would watch financial media if you come and tell them that this company is, or this company is bad, or if you come and talk about it, how great the company is, how great the CEO is, how the shareholders are making money, the rest of the public will want to watch that. So I don't care about what the media says, but I think this is not a way to solve problems. This is not, I just can't agree that, you know, that this is the right way, or I can't condone this. We have to figure out other ways to solve it. And now what has happened? I think there is a Centene, um, which is, or there's some other insurance company. Many of the other insurance companies, I mean, UNH, they have wiped off their leadership page. If you now go to their website, they've removed the photographs of all the top leadership people. They will not be announcing the events publicly. There was another insurance company that has now changed its in-person investor day conference to be virtual only, right? Because everyone has got shaken over by this thing. So they're doing some changes, but they need to change something else, which probably they are not doing it. Oh, we'll see. We'll see. I think this activism is not warranted. No RTO for investor day. Yeah. No. Yeah. Looking at a fear and greed index, I was really surprised that we are in a neutral. I thought we were in a greed phase because looking at what's happening in the market, if you are active on FinTwit, you will see screenshots floating around, three-digit gains and all that stuff. Meme coins are ripping high, and doesn't matter which company you touch in. Kathy Wood's ARKK, that is performing. So I thought maybe we are in a greed phase, but I was surprised to see that the the speed dial is in actually neutral phase. And then I realized why it was, because there are two things, which is the stock price strength and the stock price breadth. Right? Because of those two, it is a neutral phase, otherwise still in a greed phase. So I'm still being cautious, right? Not selling my holdings, but not buying with hand over fist. Still I want to watch and see where the market goes. May CNN, I'll maybe reading put call ratio. So there are 7 factors that CNN looks at. It's not just one individual factor. So if you look at a put call ratio, I think it is still on greed. So let me just bring that up. So market momentum is on extreme greed. Stock price strength is fear, which talks about, how many stocks have hit 52-week high as compared to the one which is 52-week low. So it's only like 5.5%. So very few stocks are making the market go higher, right? Stock price breadth. Put call option is still on extreme greed. So there are 7 factors that you look into, with which the overall number comes out to be neutral. So sometimes you have to dig into the detail because I'm like, what the heck? Doesn't seems to be neutral. Anyway, another interesting one. See, and this is why it is important to do our own due diligence. And second thing is there's no free lunch. I don't know, I've talked about hundreds of times that if anyone telling you that you can make risk-free X%, it means you don't really understand where the risk is coming from. So this is again a reminder. If you find any opportunity which the other person is telling you it's risk-free, you can make X%, right? Whatever the percent is. And if it seems to be, if you're making more than what the treasury is offering, it is not risk-free. And if you think it is risk-free, it means you have not done your homework to understand where the risk is coming from. So, sad story of a retiree, in 2022, of course, all the stock market was negative. So he was a little scared of staying in the stock market. And then he came across a firm called Yield Wealth, will guaranteed 15.25% return. 15.25%. What the heck are you thinking? How can anyone give you 15.25% guaranteed return when the treasury is offering you max of 4.5%? Let's say 5%. Let's say even if you put in a corporate bonds, AAA rated corporate bonds, might be 6 to 7%. There is no way. So this itself is a big red flag right there. The word guaranteed, if you are being approached for some investment opportunities and you hear the word guaranteed and you hear the word anything more than 5%, that should be a red flag to you. So what this gentleman did, he withdrew his 401k from Fidelity, rolled it over to IRA with this yield company. Right? And then November, they stopped sending out the monthly distribution. And then, so, it was just a scam. They're just kind of a Ponzi. They were paying uh, the earlier investor by the new money that was coming in. So not only that, the bigger problem that happened was if you are, he also got hit by the 100,000 tax bill because he moved his money from this 401k to IRA, and then the firm that was managing its IRA, they liquidated all the investments because they didn't want to deal with this yield company. And then if you're interested, you can look into the Wall Street Journal, but he couldn't get that back. You have some time period with which you have to reinvest in it. He couldn't do that. Now he's getting hit by 100K of a tax bill. Not only lost his lot of his money, which he has no hope for getting back, but also he's got a taxes to pay of 100K. There is no guaranteed returns. Even Treasury has some risk, but I think that is as risk-free as you can get. Right now, the markets are hot. You will see a lot of private credit, borrowers reaching out. Hey, I'm doing this great real estate project. We have these properties are on return. You can make guaranteed 10%, guaranteed 15%, 12%, etc. Do your own due diligence. I'm not saying all of them are scams. Some may be a very genuine investors who found great opportunities. But anything that's paying more than the treasuries and claim to be 100% risk-free, that's where I have concern with. If you know and you understand where the risk is, let's say private credit risk, right? Hey, I'm building a new apartment complex in an area where, let's say, TSMC is putting up a new fabrication plant. So that, and we're gonna rent it out, we're gonna make whatever X%. You must understand the risk. What if TSMC's plans change? What if the in the real estate project, I think I'm not a real estate investor, but if someone is, probably can correct me. The projects take 1.5 times longer and goes 1.5 times over budget than what you planned in. What if the developer is not able to survive that 1.5 year longer because they're not able to raise the additional funds that is needed? What if he has to liquidate? What if he has to do a distress sale because the project was not completed? Now he has to sell the half completed apartment complex. Think about the different levels of risk and then see if you're okay with it. And this is not the first article, right? Or not the first case which I've come across wherein people get lured by guaranteed returns. There is no free lunch in this world. So if you are being offered something guaranteed, it means you are taking a huge amount of risk that you don't understand yet. Scammers are starting to use AI to accelerate these kinds of investing scams. Oh, absolutely. The AI is making scammers even smarter. So AI is not helping just the businesses. I mean, it's a tool, and when the new tools come along, everyone will use it. The companies, the people with good intentions, and the criminals with the bad intentions, they all will use the new tools. But anyway, so be careful. And I know, especially this time, and there is a $7 trillion that is sitting in a money market fund because, hey, folks got scared in 2022, pulled money out of the stock market, And then the stock market just flipped in 2023. I mean, 2023 Jan, market was up 6%. And if you had pulled out of 2022, saying, you know what, I'll get back in. Now, suddenly in a month, it goes up 6%. The first reaction, oh, gosh, that's too much. I'll wait. And you waited and you waited and you waited, and 2023 went along. It was over. It was up 26%. Now it's become even harder to get in. And now in 2024 is out, the market is up 28%. Now in a desperation, if you're still sitting on the side, and this is where people get scammed, because now we are desperate. So when you're in a desperation or in a fear or in a greed, we lose our rational ability to think. Right? If anyone coming tell me, hey, I'm gonna give you 7%, 8% guaranteed, damn, I lost so much money. At least I can make 7 to 8% guaranteed. Right? And we'll do this mistake. So there is no free lunch in the markets, in capital markets. Right? Asif says even reputed institutes like Morgan Stanley have lucrative managed retirement account management services. Oh, absolutely. They all do is put in indices and charge 1%. At least that's not a scam. The service that they are offering is that they are taking away either your inertia or your fear of investing in the stock market, and they're charging 1% for it. I'm not happy that they're charging 1%, but at least it'll still give you better return than sitting in your checking account. So, but if you can invest in index fund, why would you give 1% to them? A scam in the way they try to pitch it and confuse you. Yeah, that may be true. I mean, I have not. Here's a funny story. I'll not tell the name because one of my ex-colleague became a financial advisor, and then he saw we are connected on LinkedIn. So he saw that I'm focused only on investing and said, we need to talk. Sure. So we talked. And then he said, he talked about some stuff. Hey, we should invest. I'm like, yeah, that's what I do. ETF. I say I do mostly ETFs than individual stock. If I have a time to get in the individual stock, and then say, we can protect. We have some ETFs which will protect. I mean, I said, yeah, those are called buffer ETFs. I'm aware of it. I can do it myself. Then and he was like, hey, when you plan to move some money, I'm like, what for? I mean, how? So I asked him a question. I said, I'll move money to your financial advisory firm if you do not charge any management fee. Let's talk about just a performance fee. And say, no, we don't do that. I'm like, then our incentives are not aligned. You charging 1% for what? I can manage. So yeah, I mean, all they're gonna do is to put in SPY, or looking at do the 60/40 or whatever that the standard portfolio management is, right? I mean, why would I give them 1%? And I ask them, I'm ready to talk to any financial advisor if they say we're not gonna charge any management fee, only will charge performance fee, and you have a high water mark. Then let's talk. I'm ready to talk. I don't hate financial advisor. I just want to make sure our incentives are aligned. I haven't met even one so far. I asked them question, then they said, no, we don't have that product. I'm like, okay, thank you. We'll still be friends. We'll still have beer together, but I probably am not going to move my money to you. So yeah, you need to ask the right questions to a financial advisor. Okay, ex-colleague is good. No, I mean, he's a good guy. I mean, I worked with him for many years. He's a good guy, but this is how the financial industry works. He is doing what everyone else is doing. There are very few firms which will not charge a management fee. And that's a firm I'm willing to talk. In fact, I had one financial advisor pitching me on some products. So I asked him, I don't think these are products are good. Are we a fiduciary? They says, no, we are not fiduciary. I'm like, okay, then I don't want to hear from you. Uh, all right. So let's talk about the crypto. So crypto side, it's a great news. Bitcoin crossed 100K for the first time in its lifetime of 15 years. And I guess there were some watch parties. I missed the watch parties because I generally don't sit on and keep watching this. I think, I was doing grocery shopping, and one of my friends, our WhatsApp group, someone sent a screenshot saying, "Hey, Bitcoin is up. Congratulations." I'm like, "Oh, when did it happen?" Anyway, so then I shared this. I'm like, okay, finally it was up 100K. I don't know where it is right now because this thing trades 24 by 7, and it is anybody's guess where it might be trading right now. It is just had above 100K. Right. So anyway, it doesn't really matter, but it's a huge, huge milestone. I think for whatever reason, these are like mental milestones that people would want to celebrate, right? First $10, first $100, $1,000, $10,000, and now $100,000, right? So I went to ChatGPT or Perplexity and asked them give me the historical returns, like end of a year. What was Bitcoin price at the end of a year, right? 2009 with whatever the fraction of a cent, and all the way to 2024 when on that day it actually hit 103,000. Undoubtedly the best performing asset. I'm doing air quotes if you consider it as an asset, right? The best performing stuff, let me put it that way, stuff in the market. So congratulations to those who have been in this, who had a thesis around it, and if your thesis has worked out, congrats. Pat on yourself on the back when everyone was dunking on you, saying you're crazy. What the heck are you doing? This thing just air. You can't even touch it. And if you had a thesis on which you invested, not because your friend has told or someone else or Anthony Pompliano has pumped in or Michael Saylor is doing it, but because you built your own thesis and you stuck to that thesis and you held it, yeah, it's a time that you can celebrate. So congratulations to, and I know, we've been talking about this space ever since I've been doing these sessions 4.5 years, and I still think this is not for my generation. In not my generation means still a lot more to be done in this space. So when I got into this space, it was for, hey, the fruits will be available for the next generation, right? At least 15 years, 20 years. And if in that 15, 20 years, it goes down to zero, that's fine. I'm not going to invest my life savings into it, but I want to wait for 10, 15 years for it to play out. So I think it's still, from my perspective, I think we are still early in this game. Not just the Bitcoin stuff, but overall crypto economy. We are still early. We are still in initial phases. The real use cases haven't even started to play out. Right? So still a lot more to be done. But this is a milestone, that we should celebrate. And I saw, on Twitter, folks are, hey, I'm having steak to celebrate these milestones and all that stuff. So I'll talk about it. But whenever you have these new milestones or, a new records, you also see a lot of meme coins, scam coins, a lot of, whenever there is more money in the market, you'll see more scammers coming in the market. Or if, let's say, not scammers, but anyone try to take advantage of other people because they are just naive and they can legally take advantage of you. like like Morgan Stanley's of the world, right? So we saw Hawk to a girl. She launched her own coin, and I think then the coin just dropped, and now the internet is mad on her, saying she rug pulled us. The coin is worthless, and I had taken my kid for a dentist appointment. Then I had an hour. So dentist told, "Hey, they'll." She had some feelings, so it will take an hour. I'm like, okay, I'll go out for a walk and just hopped onto Twitter to see what spaces are going on. I saw a space in which I think all those who lost money on this Hawk Tua coin, they they create a new space. I'm like, let me just jump in and interesting to see what's discussed. And I was shocked to see still there are folks who are saying, we're gonna make it successful, and they're like, we community is gonna take over this coin, we should sell this, send this lady, I don't know what the Haley is her real name, maybe, to jail, and she did a rug pull. What the heck were you thinking in this meme? What were you thinking? Is it gonna give you some dividends? This coin? Come on, it's a gamble you took and you lost on a gamble, then why are you being angry at? And then there was a change.org, and that's what I tweeted. Change.org petition was filed to Haley Welch to make her accountable. Come on, guys, take responsibility of your own actions. Yeah, this was a what a space is. I mean, come on, take responsibility of your actions. If you are degening into these things, understand what you are getting into. I don't blame Haley Welch even a bit. Whenever there's an easy money to be made, folks will come in. Now you can debate the legality of offering a coin. Is it a security offering or not? Doesn't really matter. Right? Let SEC take care of it. But we all are adults. You need to know what you're going in, and then don't. And if you lost money, don't come on spaces and say, "Oh, we need to jail Hawk to a girl because hey, she rug pulled us," or we need to jail Scamath because I invested in Chamath SPACs, which are now lost 98% of value. Come on. You are responsible for your own actions. Right? And I expect to see many more scams because right now, generally in the crypto side, you'll see first the Bitcoin moves, then the altcoins and other stuff start to move little later. So we haven't yet seen big movement on the altcoins except the BNB. I think I saw BNB was like more than $700, which was, I'm like, what the heck is happening with the Binance? But others like Solana hit $240, which is still over there. Not too much of a moment on others with respect to where they historically have been, right? So now the what the crypto folks are talking about is the next phase. Generally, I mean, if we've gone through some of these cycles, is the altcoins will pump or will go higher in value. Talk whatever. It may be pump and dump. It may be just an overall excitement that come on, Bitcoin has gone so high. Maybe I need to figure out someone next, etc., etc. So I'm seeing now Ethereum is up more than $4,000. It's not its all-time high. I think it had been up 4,000 in previous cycle also, but now we are start to see that these others are starting to pump. And along with that, a lot of meme coins, a lot of scam coins will also come along. Now, 95% of these will go to zero. Or maybe I think 95% is less. Maybe it is more than 95% have got no value. So if you want to be in the space, you have to be really, really careful. Jonathan says, I don't trust Bitcoin. I prefer investing in stocks rather than Bitcoin. Yeah, absolutely fine. Absolutely fine. There is a thesis behind this. And if you don't agree to that thesis, that's fine. No one is forcing anyone to invest in any asset class. right? So, and if you're not comfortable, that's fine. I mean, it took me a few hours of reading the white papers, watching many videos and recordings, and reading few books before I became little comfortable with it. But am I comfortable to invest huge amount of money? No, it is still a speculative investment, right? But I don't think, at least the Bitcoin, because now a lot of institution money is coming in, a lot of ETFs are coming in. The law, it is becoming an accepted asset class. So I think Bitcoin probably won't go to zero. I can't say about others. But if you're not comfortable, perfectly fine. Yeah, we need to build our own comfort level with any type of investment, right? MicroStrategy. I think there was a question around MicroStrategy earlier. All the officers, as per the SEC definition, they are selling the stocks, right? While the retail investors are just pumping the stock. So look at MSTR. What it's up, what, 900%? No, year to date it is 476%. Oh, if it was like $550, that would have been close to 700%. So yeah, it did correct a little bit, but still almost 500%, right? Because those who, let's say you can't buy a Bitcoin in your IRA or retirement, how do you get exposure? Let me find out which other companies are. And you come across MicroStrategy, think, huh, that's like a Bitcoin treasury company. All they do is buy Bitcoin and hold it on their balance sheet. So their value is derived from Bitcoin. Maybe I'll buy this. Maybe that's a thesis going on. Or some would are saying, this got a lot more beta than the Bitcoin. If Bitcoin moves up by $1, this stuff moves up by $2. And I want to get the leverage. Maybe. But remember what Michael Saylor has been doing, and he's been very clear and openly telling everyone that we will dilute the shareholders and give the money to bondholders. So the term that he used is, we're going to equitize the bondholders. Wow. He always come up with the new terms. We're going to equitize the bondholders if, let's say, the Bitcoin price goes down, and then if you have issues then in terms of raising additional debt, that he'll say we'll equitize the bondholders. We're going to basically sell the stock and then pay to the bondholders. So I don't know why folks are investing in the MSTR stock. I understand institutional investors investing in the convertible bond offering. That's the thesis I can understand. I just can't wrap my head around why I should buy MSTR. Unless you want to just do a leverage, or hey, I'm trying to do an options around it. And boy, look at the IV, like 170, 160. So it's got a very rich premium. And if you are playing for the rich premium and all that stuff, sure. But just buying just the stock doesn't make sense. So if I look at, if you buy and let's say sell let's consider this as 400 and sell at the money covered call, you get 67, let's say $65, $65 of 400. Make 16% by selling the call. It's a huge premium in this because the stock is so volatile. So that if you want to play using options, maybe, but I can't find a reason why I should buy a spot MicroStrategy stock when I can just buy an ETF if I'm bullish about Bitcoin. Why would I pay 2x the price of a Bitcoin to MicroStrategy when I can buy an ETF? Asif says, which spot ETF would you recommend? I mean, the normal way to look at it, I think, look at the top 3, 4. IBIT is the biggest one. FBTC Let just rather than speaking, let's put it here. You got IBIT, which is from BlackRock, right? Then FBTC. Then the third one that I have used is ARKB. Right? So now the way the reasons for me to pick any of these three, I mean, there are a few more. There are, I think, 10 or 11, but these three have the biggest one. They have a more liquidity, more asset under management. So I want to invest with an issuer that will stay here for longer, right? I don't want to invest in issuer on which there is not much activity happening, right? So I went with these three to start with. But then once the options were allowed on Bitcoin ETFs, which happened only 2 weeks ago, then I converged onto IBIT. So I had FBTC and I sold all the FBTC and bought IBIT. The reason, because if you look at FBTC, right, the options are very wide. Even at the money, if I look at it, it's 88 bucks, it's still like $3 wide bid-ask spread on options. Same was the case with ARKB. It's at least a dollar wide. Right? When I look at IBIT, both the volume as well as the spread is favorable. So I said, hey, now we have options enabled on it, and I do want to, do options against my holdings. Then I switched to IBIT on my options account. I think in one of my IRA, I still have ARKB because anyway, I can't do options on it. And ARKB has a lower expense or lower fee than IBIT. So if you're not doing options, everything else remaining, then from the top 3 or 4, you can pick up which has got the lowest fee. Because that is the only, I would say, a determining factor. The other factor would be if there is any tracking error. But I think these top 3, 4 will always be the same. But if you want to deal in options, then the additional layer of decision making comes in. Where do I have more liquidity? Where have I tighter bid-ask spread? Where there is a more volume of options? Look at here, 11,000, 10,000, 85,000 open interest, very near to, like 5%, 10% out. I don't think we have the similar on FBTC, right? Very few contracts. So then I switched to IBIT. I hope that answers the question, Asif. All right, Ross, markets are a way of wealth transfer from the uninformed to informed. Yes, and I will add one more line to it. It also is a way to transfer the wealth from impatient to patient investors. But you are absolutely right, Ross. You have to stay informed. Otherwise, even reputed firms are out there to take advantage of you in a legal way. And then, of course, there are scammers. All right. So I was in one of other meetup which are specific on the crypto side. So we talked about, if you are worried about losing gains because, hey, Bitcoin is up, what, $100,000, like, oh gosh, how do I protect this? Right? So now since we have ETFs and we have options on ETFs, now you can use the options, maybe try to hedge some of your positions on the crypto side. Of course, the direct way to reduce the risk is, hey, just sell your holdings. You had Bitcoin or Ethereum or XYZ coin. You can say, no, I'm going to sell it. But then you have to determine your capital gains tax. And then, of course, if it continues to go higher, then you have a seller remorse. Or the other way is maybe you buy a protection, right? You buy a put on it. Put on, you can't buy directly put on, let's say, Bitcoin, but you can, of course, buy a put on any of these ETFs. Or if you're trading in futures, you can buy put on Bitcoin futures, right? The other thing you can do, but if you buy put, it is expensive. Right? Let's get back to IBIT, which is has got the best liquidity and the volume and the open interest. Even if you look at it, like if you want to go out, let's say 40 days out, you're gonna pay almost 8% of the current value to protect it for 40 days. That means what we have 330 days, let's say 360 days. So means 40, 8, 9, almost 72%. If you annualize it, it's going to be 72% is the cost of protecting it for the year. That's huge. And it is because, Bitcoin is, this asset class is volatile. So if it doesn't go up 100%, or if it doesn't go up like 70%, you kind of look like a fool because, hey, I actually I didn't make any money. Even if it goes up 70%, you actually spent 70% in trying to protect your asset, right? So you're not going to make any money unless it goes up higher than that. So what else can you do? There are other things that you can do is if you are okay to, bear some loss and still stay in the game, right? So this is what I think I talked about during the stock stuff also you do. I mean, I did these things during the election time to hedge that event risk. What you could also do is put a collar around your position, right? So right now, because of skew, the call sides are more expensive than the put side. So I'm going out, let's say 40 days out. I am buying a put, let's say 10% down, so $5 down. I bought a put here at $52. Means $5 I can lose on this maximum. Beyond that, I'm protected. But now I have to pay $2. I can get it sponsored by selling a put here. So in fact, I'm getting 15 cents credit. Well, let's say ignore that. At a zero cost, you are getting a protection which will protect you from any downside losses beyond 10%. First 10%, those losses you have to bear, but beyond 52, you are protected. So, like I said, there is no risk, there is no free lunch. What are you giving up? You're giving up the upside, which is you can't make more money if it continues to go beyond 67. Well, that is like $10 out, almost 20% out. And if you like this risk reward, saying, I made life-changing money already. I'm up whatever. Let's say I'm up 100% on my IBIT already. And now I want to protect it. I don't want it to lose. I don't want to lose already, but still give myself some room for growth. This is one strategy that you can use to have a not pay for any protection and still get protection beyond 10%. Now, if you're not comfortable with this 10% loss, you can tweak these numbers to say, you know what, I don't want any loss. Okay, fine. Let's buy at the money put. But then you have to give up something. What are you going to give up? What you're going to give up is this thing. You're not going to make more than $3, which means more than 6%. If you're okay with it, that's fine. I mean, still, if you sell today, you're out today. This one will still keep you in the game, will give you a chance to make it maybe 6% more, and with the zero downside risk. Maybe I'll do this. I'm not suggesting you should do this, but this is how you can evaluate if you are getting a little nervous around your position and you're thinking to sell out and maybe get back in when it falls down, which we don't know. Then you incur capital gains tax and all that stuff. Maybe let's say if you have 10,000 invested in this, maybe then you do whatever, 4 or 5 contracts. Now, how much you want to protect, how much you want to still play with, you can determine how many contracts you want to do. But this is one strategy wherein you have zero risk to the downside, still have a 6% upside risk. You don't get these often on the stock side because, or every time, because right now the market skew is such that the calls are more expensive, and hence you can get this low zero cost protection and still have upside gains, right? So-called little bit of a free lunch you can get today in this market on IBIT or on Bitcoin. You don't always get it, but you can use this strategy. So I thought I'll share because it is a time when people are getting little nervous about what should I do? Should I buy protection? Should I sell? Or in this case, you will have, I mean, if it goes more than 6% in next 40 days, you'll still have a seller remorse. Okay, if you don't want that, maybe go further out, but then you'll have to pay a little bit. You want 10% upside? Let's go to 62. Then you pay $1 for this protection. There is no free lunch. There is always a cost. In this case, which I said, hey, free lunch. In this case, the cost is you are capping up your upside. The cost is the opportunity loss, the lost opportunity if it continues to rip higher. The cost always doesn't mean that you have to pay out of your pocket. In investing, the cost also means, gosh, I could have made more money and I did not. So in this case, you're giving up that opportunity to make money. That is the cost, right? And you can craft, depending on the situation, you may be able to do it on your stock positions also. But I use sometimes these collared positions to hedge an event risk, right? Election is coming in, and then I'm like, dude, I don't know what could happen, who could come in, and maybe if I'm okay for, do this, give a little bit of upside to get some downside protection, you pick up your strike prices accordingly. Can you please do similar analysis for Tesla? Let's look at Tesla. I mean, Tesla also, I think the skew maybe on the call side. I've not looked at it, but let's look at Tesla. So I'm going back on at the money. Anytime you see, not much skew. So Tesla, the puts and the calls are trading close to each other. So you don't have that uh, too much of a difference. There is a bit in terms of Tesla is at what, 389? So you can hedge your 100% downside risk and still have a $5 of upside or $6 of upside, which is what, 2% of upside, right? So you can look at the call and the put pricing to determine if it works for you or not. Generally, in case of a meme stocks or very the stocks wherein the most of the it's very bullish sentiment, a lot of folks are buying calls on those tickers. That's where you could be able to find good call skew. Or in cases that we have seen when the interest rates goes higher, that and the call there is a call skew. In Tesla also the skew is there, but not as pronounced as what we saw in IBIT. Cool. All right. Any questions on the crypto side of the house before we get back into the trad fight? Alrighty. Okay, a quick update on portfolio. Again, not a recommendation, but I want to be transparent. I bought a little bit of a CPNG, which is coupon, because the Korean market went into tailspin after the martial law drama. And I'm like, that has nothing to do with this company as such. And the reason why I got to know that there was a martial law is when I got up, I logged into platform. What the heck has happened to coupon? Why it is down 8%? It is not supposed to report its earnings. I thought maybe something else happened. Then I looked at news related to South Korea, and the first I get is okay, martial law. And I search for news, anything news related to Kupang. I didn't see any news. I'm like, okay, maybe I'll buy this. I bought a little bit of a QQQ, trying to close my short covering, little bit of a hedging. As market continues to go higher, I'll start to close on some of my hedges. Uh, Other than that, no other stock bought or sold. Okay. All right. What else? So now I have a AWS reInvent. Let's get into that. Give me a minute. Let me sip some water and then we'll talk about AWS reInvent. Ah. Did anyone of you were actually present in person in reInvent? It happens in Vegas. Did anyone of you were present in person? Okay, I'll take that as no. Alrighty, so maybe I'll quickly go over their AI and what Amazon has to talk about their basically about AWS. Had to talk about their AI offerings. And so let's quickly get into it. So they kind of renamed their offering SageMaker to SageMaker AI. Nothing new. I've seen many other companies adding the word AI to their products because that gives you bigger valuation. They've added 140 new features. Uh, Interesting thing is a hyperpod, which is I think they had introduced it last year. And this basically, if you're trying to build a model and train a model, there are multiple steps that get into it. First, you have to make sure you have the right data, collecting data from multiple various sources. Once you have that, you spin up your sorry, I'm gonna get into a little bit of a technical terms because you can't explain uh, reinvent without talking technical. And I was surprised not surprised, but I was pleasantly, it it was good to see the execs on the Amazon side actually could get into a little bit of a tech discussion. So coming back to it, you need to spin up clusters on AWS, make sure you have the compute power available. Then you need to figure out, okay, if, which models do I need to train, um, optimize it for training and run it. If there are any issues, you have to start all over again. That's why model training is very, 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 very expensive. That's the reason why Perplexity, OpenAI, Microsoft, Google, and all the AI model, they have committed of $200 billion of capex plan for next year. It is not, it's not cheap. It needs a lot of step, it needs a lot of compute power. And then if you have any issues, you restart it. Right? So Amazon introduced Hyperpod, which will automatically scale up or down, what the capacity you need. And in case of any issues, it will basically take a copy of or do a it's the term is called checkpointing, means you put a marker saying, okay, I'm done till now, or there is an issue that happened. We're gonna fix the issue, then come back to that checkpoint and restart from there again. Right. So now there are a few offerings in the SageMaker. Then one is Hyperpod Flexible Training Plan. Hey, I got 10 models that I need to train. And here's my data. This is my budget. This is the timeline. Right? Let AWS figure out the best way to reserve the capacity and do the training, right? We don't want to have a big spikes wherein every model is looking for the availability of compute resources in the daytime, and then in the nighttime, the resources that you bought are sitting idle. Right? So the better idea is to make sure you can optimize for the for all your processing power. So they say, hey, we'll have a flexible training plan. You leave it to us. Then third is a task governance in which you can define, hey, which ones are more important, which model should get priority. If you're running a big organization, there will be multiple development teams who will want to train their own models development, as well as business teams, and then they are all competing with a similar, limited set of resources. And maybe we are coming up with the holiday season, the model that determines or that predicts the the propensity of a shopper becoming a customer is way more important right now than the model that determines at a brand level, how your branding, marketing dollars are adding to your adding to your bottom line, right? So I want to make sure that the models that are related to the holiday shopping gets priority, right? And the resources are not taken away by other stuff, which is important but little less important. So what hyperbodies they do is you can define your priorities, and then it will manage the allocation of resources accordingly. Then they also mentioned that the SageMaker AI, we got a partner apps, right? Hey, I've got XYZ partner, have a Zendesk, have those partners, and they have their AI tools. Now you can actually use a partner's AI tools within the whole secure environment of SageMaker. So that's all around, some of the improvements on the SageMaker. Which one, which was surprising, I'm going to talk about it, is okay. Then they one talked about the Amazon Bedrock, which I think we have discussed Bedrock when we generally look at Amazon quarterly results. Bedrock is a platform in which you can bring your own whatever model that you want to. Hey, you want to bring in Llama, Meta's Llama, it will support. Or you want to use Mistral's, it will support. You want to use Stability or Anthropic, you can pick any model depending on what your development team is comfortable with. So Amazon supports all the models that say, hey, we support, we will have, we're not competing with you. We are supporting you in whatever model you want to work with. But now in this reInvent, they announced Nova, which is Amazon's own offering of the foundational model. So this is a change from the strategy that they talked about in the previous reInvent, where they say, we don't want to, we don't want to compete. We will want to offer you whatever the foundational models you are comfortable with, right? I didn't see a list of OpenAI because I think that they compete with Microsoft, but they have others, right? Uh, uh, and but now this reInvent, they announced Nova, and of course there are different flavors of Nova, which is a big change from their strategy. Right? Then they also talked about Bedrock Marketplace, in which you have a other companies can create a specialized models for a particular task. You can go and just use those models. And then they're a little bit more on a technical side is prompt caching, make it faster, intelligent routing. At the end of the day, all this generative AI is prompts, right? The questions that we ask. And from there, determine the cost of getting the answers from your data to respond to that questions, right? So prompt caching will be, hey, if you're in the same organization, different people are asking similar questions, you may not have to run the same inferencing again if you can do some prompt caching. Similarly, intelligent routing is they'll send the query to the right model depending on what's the size of the token, what's the cost consideration, etc. Then they talked about knowledge bases, wherein it will securely connect your data sources. Let's say you have your data on Snowflake, Databricks, maybe Redshift, which is Amazon's offering, DynamoDB, which is Amazon offering, and you build your own knowledge base. Again, I'm not going to get into the details of these. This could become too technical. Then they talked about data automation, which is you got a PDFs, you got all other stuff. And those who are in the data space will understand you run through your ETL model, right? And now this data automation will do those ETL stuff for you and take up your unstructured data and do run it through the ETL process and then make it available so that your models can then use it. And then also Bedrock guardrails, which is, hey, at the end of the day, the answer that your model provides, you will provide for your end consumers reflect on you. So you want to make sure that there is no toxic content going in while training the model. And also when the output comes out, it's not toxic. I want to root out anything related to porn, let's say pornographic content or violent content, right? So you can put out some guardrails around it. You can define your policies, right? And then of course they talked about Bedrock agents, right? Salesforce has made sure that everyone's want to talk about agentic AI, right? Which is almost same stuff. There are agents which will do the multiple steps on your behalf. You say, you know what, I want to go and you can just give your requirement to them. Hey, I'm a vegetarian, but I can't eat salty food. Now I want to have this is my cost consideration. Find a restaurant for me and book a table. Right? So your agent, AI agent, will go step by step, break down your requirement into different multiple tasks, right? First of all, I take out my food requirements, figure out, look at the menu of everyone and ingredients, say, okay, which ones are available. Then look at the cost consideration, look at my calendar, look at the table availability, and do the work for me. Right? So these are all the new announcements that happened on Amazon Bedrock, right? Then the another one is on Q, which is their developer. I think they've taken from a James Bond, right? Uh, so all the cool gadgets, Agent 007 gets from Q. So similarly, Amazon Q is the scientific brain behind this. So what they have is a Q developer interface, which is like your IDE development, integrated development environment for creating generative AI apps. Even if you're not technical, they have a no-code platform which you can use to build models and all that stuff. Q is available in SageMaker Canvas. You can state your business problem in English. You don't need to know Python. And it will guide you step by step on how to convert that your requirement into models. Then they have a Q quick site, which is you can create a dashboards and graphs, using natural language inputs. Let's say you have a different databases and data warehouse wherein your information is spread across. You can just tell them, I want to have a graph of XYZ product in XYZ region between these two dates and want this on X-axis, this on Y-axis. Right? So Q QuickSight will create it for you. It'll go to the disparate data sources, collect all the data, then it'll find out and get the required data, create it for you. And then if you want to, as a business guy, you want to run through various scenarios. What if I have a 4 tiers, 4 flavors of product? What if I increase the price here? How it is going to impact my sales and all that? So they got a quick site scenario. Jesse talked about this whole there is another within the queue. You have a way to convert your legacy code to the newer text, right? And they did talk about that there are folks, and of course they're in financial industries and in airline industry, we still have a COBOL code running, right? And nobody wants to touch it. All the developers want to work on the cool new tech. Who wants to go back and fix the old code? And in tech companies, we call it the tech debt, right? And tech debt is not a revenue generating stuff. So no product manager would want to prioritize the tech debt, right? And no developer wants to work on tech debt. But it is important because if it breaks, it brings down the whole application. So Q will allow you and help you in migrating your legacy code to the newer tech like .NET to Java and so on and so forth. Again, these are all the claims. We have yet to see how corporations are able to use it. And then there is the Amazon SageMaker Unified Studio, which will integrate all of these things. At the end of the day, I think the overall theme was we want to make running this generative AI, creating models as simple as, let's say, drag and drop. Let's say today, if we were to 25 years ago, 30 years ago, if you were to create a web page, you need to learn HTML, right? If you want to make it little dynamic, you have to learn CSS. If you want to make it more interactive, then you come to go and start making JavaScripts and all that stuff. Now, I don't have to learn HTML. I mean, I remember using Microsoft Page 20 years ago, 20, right? That time there were tools available. You start to create those tools. I have used Dreamweaver in my life. Probably I'm dating myself, but I've used Dreamweaver, I've used Microsoft Page, and I've also learned HTML when I, like, maybe 30 years ago plus, I was like, hey, what is this new stuff? It was fun to write HTML code, right? Like a header and how you bold it, TD, TR. You don't have to do it anymore now. You can drag and drop. Now there are templates available. So Amazon wants to do the similar stuff for the AI side of the house. So that's from one session that I went through. Hyperpods, new additions to the hyperpods. Hyperpod, like I said, was available since last year, but they talked about a few new additions to the hyperpod and then enhancements to the SageMaker, basically their bedrock offering. The biggest one is now Amazon is getting into foundational models. So at the end of the day, all these foundational models will become a commodity. Right? Whether you want to choose OpenAI, Llama, Anthropic, Claude, Sonnet. Who talks? I've not heard the name Sonnet in past few many months. It used to be. I think all this will become commodity. You wouldn't even know which model is running behind it. I think the more value will be derived from who are building cool applications on top of it. So that's a quick recap of reInvent. We'll see questions. Bobby says Hyperpod was announced last year. Oh yeah, I mean, yeah, that's what the Swami Subramaniam, who said that we introduced Hyperpod last year. Here are additional enhancements to it. Cool. All right, let's jump into some other company news. We are hitting actually close to 2 hours. I can hang around for another 15 minutes to answer any questions. Let me put this way. Maybe we'll open it up. If you have any questions, let's go through that. And if not, then I have a few stocks, etc., that I can talk about. But I would rather answer and any questions that you may have first. Anything on your mind? We've got 3 more weeks in this year. Don't jinx it. We are up 28%. Hopefully, we'll close above 20%. Nothing? So let's look at a few individual news from individual companies. Did you notice Amazon's message on Gen AI as leaders in the reInvent? I have seen only one keynote which is around. So I've not gone through. In fact, I was trying to search for the whole summary of Amazon reInvent. I don't think anyone has yet produced the overall summary. So I've not gone through all of them just yet. I think still Amazon, when you talk about Gen AI, companies will go where their data is, and they don't want to jump around trying to get a Gen AI model from X, data is on Y, and then try to stitch everything together. So as long as Amazon can offer, which they are already offering, the AI models, the best AI models on AWS, I mean, what's the need for the companies to go anywhere? So I think it may not, I don't think Amazon will be a leader in creating a foundational model, but in offering it to the customer in a way that makes it easier for customers to build the whole system. Yes, Amazon will still be there think Google will still stick to Gemini, but Amazon will still be there. So I'm not with this Gen AI. I don't think Amazon is. I mean, it will be a tailwind for Gen AI. They lost the Gen AI game. I mean, they're talking about creating Nova. I don't know why they should, because now we are directly competing against OpenAI, etc. But their job is to offer you the right set of systems and resources available for you to run your computing workloads. Now, whether it's a Gen AI workloads or whether those are normal data analysis workloads, I think that's what they should focus on. So Nova was a surprise. But I'll say I'll go through the others and see what happens. Oh, by the way, Amazon hit a new all-time high based on this reinvent. Lulu was interesting. Yeah, yoga pants are back. Lulu was up like they had their best day in the history of the stock, um, which was surprising. Look at Lulu. And I don't own Lulu, so I don't track it very closely. But they had a huge jump after earnings. I mean, still 25% below than their all-time high, but yeah, what is available at $225, not 3 months ago. Now it's at $400. PSTG, that's a pure storage, I guess. What did PSTG do? Let's see if Lulu or PSTG we can get some numbers. Okay, PSTG, is it pure storage? Yes. So they announced their quarterly. Uh, I don't know, whatever the stock is fine, but not much of a revenue growth, guys, on PSTG. What caused the stock to jump? Maybe the expectations were low, and that's why, because revenue growth is like mid-single digits, right? And I'm looking at barely. It's okay. It's not a great company. At least the numbers. So numbers are not great, but there will be a good story behind it. Maybe they have a partnership. Maybe they're investing in new tech. I don't follow this company closely, so I don't know what the story behind this company is. But for a number side, yeah, it's okay. I mean, there are many better companies better than like 7%, 8% operating margins. And it's okay that they have a low operating margins as long as they can continue to grow. But I don't see that amount of huge growth as well. So there has to be something related to the story that has caused the stock to jump. Or other thing is the expectations were too low. These are the only two, but not exciting enough for me to initiate a new position. APP, that's Applovin. Don't even ask me about Applovin. This stuff is up like 900% or somewhere like that. Crazy, crazy stuff. Look at this. It's up 935%. 935% for the year. Now, here's a tinfoil hat thesis behind it. I read somewhere. So I read it on the internet. So if it is on the internet, it has to be true, right? So this is an Israeli-based company. And there is a tinfoil hat thesis behind why AppLovin is doing what it's done. And now, basically, what AppLovin is, it is basically kind of an ad management company which helps companies in monetization of the ads on the mobile platforms, right? So what does it say? Software platform advertiser to enhance marketing, monetization of content, but focused on mobile platform. Okay. There was some thesis going around in which says this is some sort of a money laundering going through app login or for I forgot the term. There is a diamond. I mean, something called a diamond trade that happens in Israel, and if you need to whitewash that money, you can be on the both sides of app loving, and then you don't really mind how much you pay for it. So there was some um, notes that I saw around, it may not be all clean stuff going in an app. Again, I don't know. I'm not owned this company. Looking at it, why the company will be up 900% when your revenue is growth only 41%. Let's go to the quarterly level. How much is the quarterly numbers? 38%, 40%. It's a good growth. Right? But even uh, companies like Microsoft grow so much. It has to be something else, which is wow. Look at a net income is 434 million. Uh, from operation 434 million. So be careful. I don't know where suddenly, what have they found out to increase their net income by so much? So operating income is 534. What has changed between the last 2 days? Some unusual items. So if I look at the interest expense, other non-operating income expense comparing with the Q3 of 2023 versus Q4 of 2024, none of them stand out. Maybe I need to look into the bigger balance sheet, so P&L statement to figure out where the difference is. But look at the earning before tax, 467, this is 106. Something else is there which is causing this huge jump, which has then flown over to your pre-tax income and below all the way to net profit that resulted in 300% increase in jump in net profit. And something else is going on. So you may want to look deeper to see what has changed. Again, tinfoil hat I told. I read somewhere that some whitewashing of some diamond money is going in on the app side. TTD, yeah, TTD is is fine. I mean, I'm invested in TTD, and TTD has done well. Though I feel it is overly valued, like at 130, 140. So I have a call spread, which is now in the money. Maybe I'll sell some share and continue to be owner of this company. I mean, they've done a good job. I like Jeff Green, the new platform, their Kokai platform, uh, and which is and again, his idea is they want to go to a level where they go and tell to the marketer saying, you don't have to design any of our campaign. You tell us what your end goal is, how much budget you have, leave it everything to us. They are not there yet, but that's where they want to approach to. So, and I like that. What else? All right, what other stuff I have? So I don't see any other question. App deserves the Hindenburg report. Absolutely. And who knows, they might be on it because these things just don't happen. They just like that. Oh my God, it's got a decent or interest on the in the option side also. Intel, huge news on Intel. CEO is out. Intel had been firing thousands of employees in tranches, and now the top man is also gone. I think board have had enough of trying to turn around the company. They I mean, it's a sad day, especially those who came from an engineering background. I mean, Intel used to be a venerable company that you would want to, if you are a technical guy, or working on electronic circuits, Intel used to be the company to work for. Now, this has become like being sold in a garage sale. Okay, let's cut this portion, sell it to someone, cut that portion, sell it to someone, and all that stuff. So anyway, CEO is out. Though it is reported that he has retired, but you don't have these retirements suddenly over the weekend, and and you're retired on that day itself, right? He's out from a he's out from a board of directors. He has now no role to do it in an Intel. They got a CFO, and the new position that they created called product CEO. I don't know why we would do that, but they both of them have been named as interim co-CEOs. So there's a lot of red flags going around anyway. You have a product CEO, and then there is rest what is an operations CEO. Both are co-CEOs, unless they find and they continue to find a permanent head for it. I don't know what's going to happen, but my guess is board of directors had enough in terms of all the expenses that Intel has to do to build up the foundry business. Foundry is a takes 10 years to build. It's going to be a consume a lot of capital. That's why it shows up directly on Intel P&L sheet. Intel has been selling some of their assets. They sold a stake in Mobileye. They were looking to offload the stake in Altera. Do we have a Oh, Sachin is another. Who else? Oh, Asif, you are from semiconductor industry, right? What does Intel has, which is in same as a lattice semiconductor? Altera or somewhere there is a company that they acquired. They were trying to sell that out to raise funds so that they can fund their foundry operations. It's been dragging on their balance sheet. Pat Gelsinger didn't want to give up the foundry, so they had Pat go out. MBLY, Ramesh, is a Mobileye. There is another company which is on. Now I can't recall what you call the specific semiconductor which you can modify it on the fly. Lattice works on the same one. Xilinx has the same chips. Not ASICs. Xilinx has the same chip. What do you call Xilinx and the Lattice semiconductor? Um, Damn it. I won't get that word. There is FPGA. Yes. FPGA. Thank you, Sridhar. These are work on FPGA chips, right? So Intel had bought what Alterix, some company. What I last heard was they're trying to offload that to raise funds for foundry anyway. We'll see. We'll see where it happens. But sad day. Now, my thesis on I still own shares of Intel. My thesis is still the same. We need chip manufacturing is a strategic to US, right? So maybe we'll figure something out, break Intel into pieces to keep a manufacturing in US with the company headquartered in US. Even though we have a TSM building plant here, but it's still a Korean. It's a Taiwanese company, and with the big China right across the Taiwan Strait, it's a risk for us. So let's see. And this happened after the Biden administration finalized 7.9 billion deal to give it under CHIPS Act, and then the CEO got fired. Anyway, uh, the other company that I hold in portfolio, NanoX, it received FDA approval for a lot of other scans. They did talk about it during the previous analyst call that they submitted, you know, to EU for CE and for US FDA to allow them to use their NanoX ARC machines for general use, including chest. So that approval was received and the stock was up like 25%. Still, this is a moonshot. I think they have now got 35 machines into US in various radiology departments, and these things take time. So it could go down to zero, no revenue yet, or if it becomes successful, it could become 5x, 10x. So position it accordingly. Other stock, C Limited hit a new all-time high. And I think I had mentioned when I reviewed the earnings for C Limited, saying, hey, I expect analysts to come up with the higher price targets, which on November 13 was it started to coming up with it. I mean, the results were great. The quarter was good. Business is good. You know, stock price will follow. Of course, in short term, the stock price and the business get detached because of emotions coming in. So yeah, 12th, lot of, I mean, we'll looked at their business from their earnings, and then 13th, I guess we start seeing upgrades coming from the Wall Street, and now it hit a new all-time high. So a year ago, it was available for $35. And so now it's been up 204% for the year. But before you go and dump your 401k into this, I don't suggest you to do in any company. But please take note of this. At some point of a time, it was like $370. You always, market will give you opportunity to buy it at the right valuation. So you don't have to FOMO into it. I had to struggle hard not to buy this during, this 2021 year. Not that I didn't, capitulate to some other stock, but I've been watching this going high, going high. Somehow I couldn't gather the strength to buy it, and thank God I did not. I think my first buy was maybe around somewhere 35 in 2022, when nobody wanted to own it, right? And then it's been a good ride so far. So, and of course, they've improved their business. They focused on reducing their cost and improving the cash flow, which has helped the stock. So that's C Limited. Couple of others. Jumia lit up again on Friday because they released the numbers for the 2 months. So again, this Black Friday has become a Black Friday month. In for Jumia, they run these promotions for whole month of November, and the numbers were encouraging, right? Total orders up 18%, GMV on constant currency, physical was up 33%, repeat customers was up 9%, so on and so forth. Stock was up like 20%. Again, still a moonshot. They changed their strategy sixth time in 5 years. Hopefully this will work, but I'm keeping my fingers crossed. Now they're focused on becoming more on the logistics side. This is the company that I've seen cutting cost at a pace at which I've not seen any other company doing it. They cut it by half, right? In a year. So maybe, yeah, hopefully they'll clear the house, and then it will get reflected in the stock price. Next one, this is what we talked about last week when no, someone brought up Lunar, and I said, hey, they will continue to need additional capital. So not surprised to see that this week they basically did another share offering, so diluting the existing shareholders. I don't own the stock. I have no intention of owning it. But whoever had asked last week, be aware what you're getting into. If companies can't make enough money to sustain their operations, they will need money from outside. Either you raise on a form of a debt that increases risk, or you raise it in forms of equity that will dilute the shareholders. Right? Something gotta give up. Right? So next one, Palantir has secured new partnerships with Anduril. Then there was a partnership with Booz Allen Hamilton, and also I think one big news was they also received one of the highest security levels, FedRAMP authorization. They received approval on that one, and the stock has been off the charts. I had a thesis which I talked about last year when I bought it at $6.50. And then I talked about it in every quarterly earnings. I'll give you an update of this is what's happening with the stock. But now this is way beyond any of my rational thesis, right? So I don't know. Sometimes the stock can go crazy. So, and probably, I'll retain half of my holdings, sell the half. I'm on process of it, but I can't explain why the stock is at $76. Not that I'm sad about it. I mean, it's been one of well, I would say probably the best performer in portfolio. In for this year, it's up like 360%. So I don't want to complain about it, but just that I don't understand why the stock is behaving like this. So but it is what it is. I'll take some gains, hold the rest of the shares. I can't justify this price by any means. You can give me all the stories around the future. That's all stories. I can't justify this price. So, so if you followed me into this stock at $6, $7, $10, $12, you can do what you want to do it, but uh, don't even ask me why this is at 76. In my dreams, I can't explain. Same happening with Tesla. Yeah, Tesla is like, and again, I'm bullish about Palantir business. I'm not bullish about the stock right now. So I would want to see, I mean, look at previous quarter, it grew 30% revenue. Good, decent, but not 300%. A lot of it is being driven by the narrative, which is fine. All those are good narrative. All those are positive news around the company, but it has to convert into the business performance. Right? Short-term stock prices are driven by emotions, by narrative, by the stories, by what's happening around the world. Long-term stock price is driven by the strength of the business, the cash flow it generates, the profits it generates, right? So fine, it's up to 76. I'm happy that I own the shares. And I'm also happy that I sold some of it in case it comes back down. So I couldn't decide to which way to go. Market can stay crazy longer than you can expect it to be. I'm glad I didn't sell all. And I'm also glad that I don't hold all. So I found a middle way. Yeah, Tesla, I have a call spread which is in the money. That's okay. Tesla is like, I think that's a Elon factor in Tesla. Alrighty, which other individual stock I have? I think yes, Shopify. Black Friday, Cyber Monday, all looks good. They have a record-breaking $5 billion in sales on basically GMV for Friday, and Shopify stock responded with this. Stock was up 5%, I guess, on after this news. So right now, I think the market looks all very positive, and that's sometimes a concern for me. When everyone is so bullish about it, that my alarm bells goes, gosh, what are we supposed to do? That's not a good situation. But I'll take it. I'll take it. All right, guys. I guess that's all for today. Uh, Harshmita, where can I find recording links? It is on my website. Let me give you the link. So hold on. If you go to my website, I think there is a menu, says members. Under that, you have a weekly webinars. That's where you can get access to the recording. Cool. Alrighty. Well, thank you everyone, and we'll talk again next Saturday. Next Saturday is what, 14th? Oh yeah, 14th and 21st. I think we'll have maybe 28th. Probably we may not have a session. We'll decide. I think we are still figuring out, what to do on that week. Maybe we'll go out somewhere. In that case, I'll cancel the session. But yeah, we'll meet next week again. Cool. Thanks everyone. Bye bye.